Hello to all traders and welcome to our monthly engagement for the US non-farm payrolls. Today is Thursday for a change, as you probably know if you are here watching us today, because we are celebrating the July 4th in the US on or tomorrow, no, on Saturday, excuse me. So tomorrow is a bank holiday there, so we had to move the NFP a little bit back, which is fine with us. Whatever the case is, whenever it is, whatever time it is, we'll be here streaming live for you. Now, there is very interesting developments to look into today. As always, please feel free to join me and follow me on Twitter, LinkedIn, as well as Instagram. I post there on a daily basis, and well, usually it has to do with technical analysis. So you might want to have a quick look at what I post and comment, like, and share if, of course, you like, or you can even start a debate. Before we go ahead, though, I'm just going to have to read a risk disclaimer first. Forex exchange trading and investment in derivatives can be highly speculative and may result in losses as well as profits. Foreign exchange and derivatives trading is not suitable for many members of the public, and only risk capital should be applied. This webinar is provided for information purposes only, and no information contained herein constitutes solicitation for the purpose of the purchase or sale of any commodity, security, or investment, nor should it serve as the basis for any investment decision. Orbex Ltd does not guarantee the accuracy or completeness of any information or analysis supplied. So, well, the agenda I was talking about, well, first of all, we're going to have a short NFP preview. We're going to see at the analyst expectations. Discuss the previous employment numbers, the unemployment, and the average hourly earnings on month-to-month and year-on-year basis as well, because all of these lagging indicators are important for us to be able to make some sort of forecast. It's like a simple financial modeling in order to get an idea or a hint at how the market is going to be affected during the NFP and after the NFP, of course, as well. And then we're going to talk a little bit about how we can select the best pair to trade for the day. There's two different ways, fundamentally speaking, well, not fundamentally, but let's just say based on interest rates differentials, and the other is based on the daily intraday strength on certain currencies. Now, well, as you can see here, the NFP last month came at 2.5 million, pretty much. That was in addition, right? The consensus for this month's NFP is 3 million, okay, jobs added. Now, this is a good indication because we're expecting the jobs market to grow month-on-month basis, right? Now, May's data, which is the release back in June, beat expectations by, well, if you can see down here, we've had nearly minus 20 million, 20 and a half actually, right? Which is, there was the worst figure that we've seen ever. With the addition of 2.5 million, that obviously is a divergence of nearly of over 23 million jobs compared to June. Right now, reduced corporate layoffs, they do point to a less bad jobs report, okay? And with economists now anticipating another positive figure, which means jobs are going to be added, we might see the dollar strengthening, right? Now, contrary, jobless claims still show over 1 million unemployment people actually sign up for unemployment benefits on a weekly basis, right? And that shows a consistent number of unemployed people that are receiving the benefits. Obviously, this is not a good sign, right? Now, June's release bounced big, right, after the worst on record, and a better figure is not guaranteed this time. Last month, if you remember, if you were watching, we talked about, well, yes, it will be definitely an increase better than expected because that was like the worst ever. This time we cannot guarantee that, obviously, but well, taking into account how big a bounce we saw last time, we might see jobs being added in the U.S. labor market, labor force. Now, interestingly enough, as well, the ADP showed some signs of confidence as well yesterday, despite the numbers showed that well, missing expectations, as May's figures though were revised up. So the upward revision was very good because the revision was also up. I mean, and when I say up, I mean on the positive side, right? Now, the analysts expect, well, in terms of unemployment rate, because guys, we shouldn't really go trade in the markets if we're just looking at the headline line. So we need to look at all the important economic indicators, and a part of the NFP is the unemployment rate. Now, analysts expect a 12.3 unemployment rate, and this is a decline compared to the previous, which was 13.3, right? In May, though, analysts had estimated an unemployment rate of 19.8, right? And we did beat the expectations, obviously, at 13.3. Very good number compared to the expectations, but still very bad for the US economy. Now, if we look at the hourly earnings, those also fell by 29 cents, okay? And this is around 1% fall. The previous month was up bit because we saw the hourly earnings rising by $1.35, which was, of course, indicative of labor demand because all of the people were closed, locked in. So this figure, though, the decline, it reflects to the lower paid workers, okay? Now, for this year-on-year print, wages are expected to fall at 5.3% year-on-year, okay? This is below the previous month's 6.7 figure. Last month, analysts missed expectation as well. They expected 8.8%, but, well, we got a 6.7. Now, before we continue, it's very important to have a look at the CPI inflation as well, because as you well know, if interest rates are decreasing, this is supposed to help inflation rise, right? But we don't actually see that. We are seeing interest rates being at low levels, at like historical lows, while at the same time CPI inflation is falling. Now, the latest CPI inflation figures decreased to 0.1, nearly, right? It didn't get to zero. That would mean deflation, right? And that's below the previous 0.3 figure, and also below the estimate of 0.2. Now, the PCE, which is the preferred inflation measure for the Fed when they set interest rate policy, also fell at 0.5, so from 0.6 on a year-on-year basis. However, on a month-on-month basis, it went up, back to positive. So there still seems to be some inflation at 0.1. That is from a deflationary minus 0.5 month-on-month. Now, guys, why is it important to have these like 10-15 minutes analyzing the what has happened actually over the past month is important because we are going to get, as I said before, an idea. We can get a forecast and have expectations of our own. Why this is important is because, well, we'll have two different set of groups, first of all, right? Lagging indicators and also leading indicators. The lagging indicators are the ones that they can give us some sort of idea about where the economy is heading, right, or what the economy did over the past month. But still, this is a lagging, which means like we're still not going to get prices being much affected by these figures. Now, the leading indicators on the other side, which are the treasury yields, and the equities, and also the crude oil prices, is what really tells us what sentiment is doing on intraday basis ahead of the NFP. Right? This is why it's very important to look at those numbers, because they are going to tell us pretty much what is happening with business conditions in manufacturing and services. We're going to see how consumer optimism is changing, whether it's changing or not, whether to the upside or the downside, because this is what is affecting spending as well as savings. Probably we are actually going to well, the focus right now is on savings rather than spending, because all we know is that people are still locked down. Most of the people are saving rather than spending at the moment, right? So we have a better idea of what is really happening in the business cycle. Now, the leading indicators, and here's something that is very important for you to know: treasury yields and equities, when they move up, sentiment is bullish. It's bullish, okay? And that really tells us that market participants are really projecting a good NFP. Okay, this is a positive correlation with the equities, the treasury, and the NFP. Now, there is also expectations when inflation push-pull, as we say, created by crude oil prices, are affected as well. And there is also a positive correlation between crude oil prices and NFP, but not as much as with the yields and with the equities, okay? Because what is happening really with crude oil prices rising is that the prospects of higher wages are also rising, okay? Now, this is a table where we are really looking, combining it into the tabular form, the leading and the lagging indicators together to get an idea of what we can expect for this month's NFP. Okay, as you well know, okay, ISM non-manufacturing, we didn't get this figure yet. We're going to get it next Monday, if I'm not mistaken. But ISM manufacturing, the employment component, are doing very good. And today we're looking at employment data. So this is a very good indication that the NFP is going to probably at least be positive this time, right? This time around. Now, there were so many job cuts, and this is not a good sign, I'll be honest, right? Jobless claims, as I said before, over 1 million on a weekly basis. This remained to be the case. This is the last weekly jobless claim reports here, and it's negative. The ADP non-farm, as said, well, it went below expectations. There shouldn't be any minus here, by the way. This is a mistake, by the way. But the thing is that we had a forecast of 2850, but we missed the expectations here, right? The thing is that the previous was revised up, and this is what really makes a difference now to these. It becomes a little bit more significant this time around, at least the ADP. I wouldn't really pay attention to the ADP usually because the divergences have been really broad, to be honest, between the ADP and the NFP. But at this time around, as I said, it's important that we had an upward revision. Now, sentiment is not doing good. The University of Michigan consumer sentiment has fallen to 78.1, below expectations, below the previous number as well. However, CB consumer confidence is up, and is up quite a bit, and we are actually heading back close to the 100 barrier again. At the same time, core retails are rising 12.70%. This is a very big number, and last time we had a minus 15.2. So we are expanding again, okay? All the leading indicators as well show us positive signs. Yields, 10-year yields are up 0.7%, equities are up 0.5%, and crude oil is up 0.7%, all pointing to a better than the previous NFP, and perhaps the expected as well. So it all really hangs on what the expectations are, okay? So this information, you can take it into whatever you wish with, but my understanding of this table is that we have 4 cons, 2 pros on the lagging indicators, and 4 and 4, which is they balance out, they offset one another, okay? And then also the leading indicators are all positive, which is very rare to look at, okay? This is very rare. Now, if we assume that, okay, let's just suppose that we're going to go on supporting that the NFP is going to be positive, then we also need to pick a pair, right? Which pair we're going to trade? Well, there's 2 ways of selecting a pair. One is interest rate differentials between countries, and the other one is the strength meter. Interest rate differentials always look at the one with the lowest interest rates, this is Switzerland in our case, and the one with the largest interest rates, which is the United States, Canada, Australia, and New Zealand. So the USD CHF is a very good option because the differential is 1%. So in case the NFP comes positive, then USD CHF would be a very good opportunity for a long, right? For a long trade. Now, other opportunities, of course, are there on the table because we know that, I mean, euro dollar and dollar yen are always the ones that they are traded mostly, and the volumes are quite high. So it's very good to go with high volumes because, well, we can presume that at least the spreads and the slippage will be lower on those pairs, okay, as well, which is very important if you are a new trader. But yeah, in case that we see positive NFP, dollar Swiss franc would be the opportunity here at least, right? If the United States, if the NFP is bad, then we're most likely looking at the United States dollar against either Canadian, Australian, or Kiwi, okay? Because they all are, these are the strongest ones. Now, what we can do, we can look at the currency strength meter to really see which of the interest rate differential choices that we made are supported, right? And here's what we see. The currency strength meter indicates currently that euro, pound, dollar, and Swiss franc are all equally strong, okay? And this is a bit rare. Now, what really is of highlight here is how weak the yen is. So, and if we look at the Swiss franc as well, we've got, I mean, it's like pretty strong, right? So we can change our view, we can change our selection to the shorter term, projection and selection to be dollar against the yen in case the NFP comes out positive, because dollar is very weak, yen is very weak, and yen has also negative interest rates. Okay, so dollar yen would be the choice, or dollar Swiss franc. Now, in case the NFP comes out worse, then I would go for Kiwi against the dollar. Okay, because these Kiwi is the strongest of all. Okay, it just broke actually the 65 cents as well. So I would be looking at that as an opportunity to open a long trade in case the USD weakens on because of a bad report, right? Now, before we go into the charts, guys, I want to tell you that if you don't have experience in trading during the NFP, it's better to stay out. If you're really keen to trade, it's better if you just wait for the post-effectual structure to settle, and then decide whether you want to go long or short or stay out. Okay. The other choice, of course, is to just if you're really keen to trade, really keen, then obviously you can do it, but make sure you use stop losses and take profits because slippage is very high. If you have open trades, you can hedge your positions, or if you are risk averse, you can just close your positions. Okay. Risk management should always be applied. Do not go over leveraged because, well, without a stop loss, your account is not going to last. Okay. Now, I'm just gonna quickly change that screen back here to our MT4 charts, right? And what we're going to do, okay, it's very simply we're gonna set some entry levels and some stop levels over here, okay? Now these are from the previous NFP, so we're a little bit high. Now I'm gonna go on euro dollar, of course, okay? And the first thing to do is look at where we are standing right now, okay? This is where we are. This is a very good potential, for a short there. This is the second level. And then on the upside, we can also look at over here, 113.29 or so, right? And then one more to the downside, it will be the previous opening. Okay, so over here on euro dollar, we have, we are a bit far from the entry over here, 12.51 and 95, we're 11 pips. So perhaps it would be a good idea to go down on the 30 minutes, right, and set another entry over here. So on the downside as well, since we are trading there, this could be a good entry level. Okay, so 112.82, and on the upside, 112.95. Do not forget that we are very near the 113, and we could really see a big resistance over here. So I would be very careful. On the downside, we can head down to, that could be a very good level first. Multiple take profits are also suggested here. And on the upside, we don't really look like we are close to this price over here. 113.100 is going to be the other level. Now, let's quickly jump on dollar against the yen, because As I said, I'm very interested into looking at a buy opportunity in case this comes out to be negative NFP, right? So on the downside, on the 4 hours chart, we're looking at this over here. On the upside, we can go over here, and then if we look a little bit further up, one, and down over here two. Okay, so as you can see, guys, it's very easy to set stop loss, take profit. Well, let's just call them support and resistance levels. Okay, it's high activity levels, and they are very easy to spot. So on the 1 hour, we are good. We are good. It looks like perhaps we can have an entry over down here instead. Okay, we can move that over here a little bit higher. Yes, taking into consideration this low as well, the higher activity level, if you ask. So on the upside, we can perhaps have our TP1 here. We can do our TP2 over this high activity level, and then we can go for TP3, I would say over here. This is a good one as well. And on the downside, we are okay down there. I will just probably place one level more as well here. Okay. Now, jump quickly on QE as well. QE is the choice in case we see the, oh, well, that's a good level actually to consider in case the NFP comes out worse than expected, right? So that's one level, very close to where we are. On the downside, we are here, and also, well, this one is another one to even have an entry as well, since we're on the 4 hours. And we need another one over here. Down in the 1 hour now, well, we are a bit, okay, this is too close. This one is fine. We had a big surge before, just before the, that's a previous high as well, just before the NFP, which is very unusual, right? So is it priced in, or are we going to see a complete reversal? Because both scenarios are in play. Okay, so you see, guys, how easy it is to set some support levels and resistance levels. What else? Use the CHF. CHF was strong, so we can leave that out. We can do the dollar CAD. Let's have a quick look again on the currency strength meter. Well, QE, Aussie is actually weak as well, but well, we have a weaker yen in case we want to trade the dollar against something weak. Euro, and then the pound we can do as well. Let's quickly do the pound. Let's see where we are on the pound. We had a good move to 125 and above, and this is always a good support level. On the top, we're looking at the previous top just recently taken out. Over here, I'm looking at this as a high activity zone as well, and down again, this is another one. Okay, but because pound is quite volatile, tends to be quite volatile, I will want to place perhaps another level down there. Over here, I think that would be a good level. Okay, so we've got, let's just have a quick look what we've got. We've got dollar yen, euro dollar, sorry, on the 1 hour, so we can go down on the 15 minutes, right? And that's the same with dollar yen, pound dollar on 15 minutes. Perhaps we can zoom out a little bit. Okay, 15 minutes zoomed out on QE. That will do for QE. That will do for pound. And what about taking these two out? We're not going to need them, and we have 4 nice charts over here. Okay, now as I said before, setting support and resistance levels is much easier than what some people might think. We can set another one over here, seeing high activity. Okay, dollar against the yen. We've got quite a few levels here to play around with, so we're not really worried. And we have 5 minutes left to to start receiving the results. So I'm just gonna go ahead and open another tab over here, go for our economic calendar, make sure we are prepared. So we are currently seeing prices moving a little bit lower in general, which means the dollar is strengthening. Guys, there is another thing I want to tell you, that in case you don't see any activity levels, I mean, a very good option is to just go and take your Fibonacci tool and draw from the last opposing leg to the upside, right? So you see currently we've just actually bounced at 23.6 on euro dollar, and we are forming a high activity level at the 38.2. So the 50, the 61, and the 70. Let's just add the other one as well. I think there we have 0.786, and we'll go 78.6. Yeah, so we've got another one down here. Okay, so these levels also can play out very well as well. On dollar yen, well, I'm not going to use the Fibonacci tool here because it really looks like a sideways market, so it's a bit pointless. On QE, well, we need to go a little bit further out on the 1 hour and draw a Fibonacci over here, down 23. Well, it's too far, so we'll go at the second leg. The second leg gives us some more detail over here around the levels. The 50 is very good, the one we drew before. Okay, and then of course on the upside, perhaps you wanna look at these resistances for now that we have already drawn, and the previous high, of course. Okay, and pound, a similar story. I would place the Fibonacci over here. Okay, and going down on the 15, and we'll see where 23 and 38 is. So what we've drawn before, high activity levels, are pretty much like pivot Fibos, if you wanna call them that way. Yeah, pivot points between the Fibonacci retracement levels. Okay, so there's 2 minutes left. Let me just quickly bring over the NFP results should be out very shortly. I mean, we've got less than 2 minutes. I was just probably saying a minute. Wednesday, Thursday, that's today, so ADP. So Thursday we should be very clear, very close. There we go. So we still see this, like loading. Let's see what's happening. Right, so I just don't want to hide this, so I'm just going to pull that back up to here. We should be fine, and we are going to start seeing prices moving very shortly. They are moving already, but let's just see what we get this time around. These expectations, by the way, are wrong. Okay, let me just actually take you to a different calendar. Well, dollar is moving up as we speak. Actually, well, yen is moving down, to be honest. the results indicate that there were 4.8 million jobs added into the US labor force. The unemployment rate fell to 11.1%. Okay, which is a very good NFP report, if you ask me, as we anticipated from both the quick forecasting we did based on leading and lagging indicators, and also from the current structure of the market pre-NFP, where we were looking at this. We said priced in means two things really, and we gave the option of the second being, they're moving up because they will move lower very shortly because the NFP will be good. And this is exactly what happened. Now, if you look at the other data, which includes the average wages, on a month-to-month basis, average hourly earnings fell to minus 1.2%. So wages are decreasing, which was pretty much expected, at least from our side. And year on year, we had a decline down to 5%. Okay. Now, as you can see though, we don't really see markets moving as much, right? I mean, we would expect dollar yen at least to move up because we saw that euro, Kiwi, as well as the pound are strong against the dollar anyway, right? Which makes us think, are we going to see markets really moving as much this time around, or is it going to be like a non-event pretty much? Well, on euro dollar at least, so far, we've seen the euro rising 14 pips. Okay. Dollar yen is gone up not even 10 pips, and it's retraced these short-term gains. Kiwi is remaining strong against the dollar with 12 pips, and something similar with pound. So as you can see, euro dollar pretty much is the one that's done the biggest range so far, marked the biggest range. That can mean two things, guys. One, there is going to be a big whipsaw effect, which means all of these going to reverse in the next few minutes. Or, as I said before, we're not going to see markets really moving as much because most of the investors are probably focused on what is really happening with the coronavirus cases in the US, okay? And expecting, I mean, even if we get a good NFP, that doesn't really show that there is improvement in the economy. You know, it's just gonna, it's just an indication that people are getting back to work at least. Okay, so which is the two different things. If you go back to comparing these NFP with an NFP of last year, for example, where there was no coronavirus, then we're looking at completely two different things. Okay, the components, the context is completely different because all these numbers that we get now are a recovery indication rather than an expansion indication. Okay, so there is this is the difference that we are talking about. Now, I mean, in the next 5 to 10 minutes, we're going to see probably how the markets are going to settle. I mean, which direction at least. Okay. Now, as I said before, I mean, the 1290, the 13th was missed. The first one was taken, including the entry. So, 8 pips already done would have been. As you can see, though, the rest of the ranges are very, very, very small. Okay. Now, the unemployment rate going down to 11.1 is a very good indication. It's actually double compared to what the expectations were, double the rate, okay? Um, and it's below the 13.3 that we saw last month. Average hourly earnings were expected to fall. Now, jobless claims, they are still up, right? The 4-week average as well as the weekly one. Now, well, we saved a few thousands over here, right? But still, we are adding 1.5 nearly million people again on a weekly basis. So, which really makes us think, do people really return to work? Or, do they just prefer to stay home and take the benefits? This is a good question, no? Well, the case is, though, also we need to consider how many of the companies are really hiring. If we take into consideration the fact that the wages are falling, they might be hiring indeed, but maybe they're not actually rehiring the people that lost their jobs. Maybe they are taking people that, accept lower wages pretty much. Now, we've already gone past 7 minutes after the event already. Dollar yen doesn't seem to be moving. Generally speaking, we are seeing a rather weak dollar, I would say. Okay. Why don't we have a quick look of what is really going on with, let's have a look at gold, perhaps. Yeah. To have a better feeling of what is really happening with the safe havens. Yeah. Well, gold is falling. Okay, so this is an interesting development, isn't it? Gold is falling with the dollar, which suggests that dollar is still considered as a haven as we speak in the current markets, at least. Yen on the other side seems to be, doing nothing pretty much, because it seems to be the dollar that is moving rather than anything else. We're probably going to take this out as well, the second one on euro dollar. And this is exactly why I've been, I've been warning everybody who's here watching today that, the data can simply mean nothing right nowadays. So it doesn't really matter if the NFP was good or bad, which is very good, to be honest, right? The NFP is very good this time around. Unemployment rate, very good. Non-farm payrolls, very good. Average hourly earnings, not good. They decreased, but well. And initial jobless claims and the 4-week average as well seem to be still adding a positive note on this. I mean, it's not the report's not supposed to come out together usually, but since that is a special case with the 4th of July on Saturday, well, it might be actually adding some shorts, some short bets onto the current dollar weakness, which is where it's attributed actually, to. So that was taken out exactly as we had predicted. Now, everything else is far from really going anywhere, to be honest. Dollar yen remains in sideways markets. And now the question to ask ourselves is whether in the next 5 minutes, we're going to see prices, well, moving all the way down. Now, in case we break higher, we need to break on euro dollar, for example, we need to break the 113, okay, and then perhaps we're going to head for 113.10. Whatever the case, for those who are keen to trade but they are a bit more cautious and they want to wait for the markets to settle a bit, I would expect the moment I see, in case we break above that level, of course, right? If we don't, then, well, we're going to continue with the usual flows, and the NFP is not really going to be much of a mover this time. But in case we break higher and with a positive NFP, this would suggest that there's going to be a lot of orders triggered at 113 or above, perhaps. And the moment we can see prices started or bulls starting being exhausted, then this would be a good opportunity to go short, because this would be the opposite to the dead cat bounce, right? Where price would be expected to move all the way up, go sideways for a bit, and then move all the way down to at least the 50% of this last move, right? So in case that would happen from there to there, let's assume then up here would be a good opportunity to, well, if we see some sort of reversal candle here, candlesticks, right? Formations that will go back to the 112.95 or so at least. Okay, so this is good 20, 30 pips out of nowhere, to be honest. I don't see any of the other pairs actually offering something similar, perhaps, because, well, the ranges are very, 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 very low as we speak, very, very small. Pound could do it. Pound could do it. And if we take into consideration, yeah, let's just look at this trend line as well. We need to take into consideration this level as well. Okay, the rejection up here. We are above 125 as well. Okay, so we can look at this even as a retest and a further continuation, or this is simply a fool's break, and prices can just go a little bit further up, take out this trend line, or even the 125.50, which is a very good psychological level as well. And then once we get a reversal candlestick, then we can start looking for price to move lower. And if we take into consideration as well how much, how big this rally has been, I'm probably looking at a move down to 124.50 levels, okay, and perhaps even lower. But obviously this is a little bit, out of context compared to the NFP, okay. QE, what else shall we look? Shall we have a quick look on, let's see, dollar against the Swiss franc. You see, well, we did talk about a week, well, I mean, this is where you see these two, being equal in terms of strength intraday basis. This is when we'll have to go back and look at the interest rate differentials between the United States and the Swiss and Switzerland, right? So we've got 1% divergence, and this is what we see on the dollar against the Swiss franc currently, okay? But as I said, because it was like similar, because we've seen similar moves intraday, I didn't want to look at this at all as an opportunity. It was not in my inbox today, okay? But it could start moving higher as well, okay, if we see the dollar increasing, right? There we go. We'll start seeing the first moves of the dollar, yeah, and I would assume that's the same for euro dollar as well, yeah. So it looks like a whip show effect right at the 15 minutes. So by the end of the hour, there's very good chances that we are going to reverse all of that. I mean, we nearly did on euro dollar at least. We're just 2 pips, 2 pips or up. QE is holding well, as we said, because, well, it was the strongest one of all. as we saw on our currency strength meter, yes. And finally, dollar yen starts moving higher. Okay, so either case, whether that was the entry on the upside or that was the entry, I mean, well, I do not know which one you placed, but this is likely to get to the 107.60. But we really need to look at the 5-minute break. Yeah, let's go higher. We need to look at the 5-minute break of the 107.54, 58, and perhaps even this over here, because we still haven't really closed above. And then you might ask, the 5-minute time frame? Yes, the 5-minute time frame. Every single candlestick matters, especially during the NFP. And volumes matter as well, but I don't have them on my charts this time, at least. Okay, so we need really to pay attention at what is going to happen until the end of the hour. Okay, this is a whipsaw effect. We've reversed nearly all gains against or for the dollar, since the NFP was very good as well. So we're either going to get a reversal now all the way down and start pushing lower with a stronger dollar, or a non-event. That was all that there was. And since markets are going to be closed as well in the US tomorrow, we might see, well, some consolidations taking place today and tomorrow as well. And if taking into consideration that pound broke 125, that could stay there maybe until Monday or so, who knows. Euro dollar below 113, Kiwi Aussie above 0.65, dollar yen below 107, Aussie below or above, let's say, the 69 cents. Perhaps even below the 69.50. Yeah, dollar CAD. Well, we didn't look at this one, did we? That would be a good opportunity as well. It looks like it. CAD was actually quite weak. Yes, and the Canadian. The truth is, the Canadian report is due tomorrow, right? Friday? No, it's actually probably next week. So what is really pushing a stronger Canadian dollar? Well, we don't have any data coming through. Or balance of trade was positive, but that move tells me that oil is strong. I'm not really I can't really think that this is trade of balance. So WTI, where are you? There we go. Well, it is up a bit, but not as much as we would expect. In that case, we need to look at equities. Okay. Yes, there you go. So equities rising. Well, with these average wages, some of the CEOs are going to have a party. Looks like it. With wages falling that much, you know, then they might be able actually to hire even more with the same money that they used to. So that's why might be the reason that we are actually seeing the Canadian going up. It's just purely a risk sentiment because equities are rising as well. Okay. And I would assume that would be the case for Dow Jones and Nasdaq as well. Yeah. All on the other side, well, it might just be because we are really, well, near the 40. And we had a false break already, and it seems like, you know, we might start moving lower again. That's why prices are not breaking higher. But these sideways markets in the oil market is expected to remain like that at least. Well, we've had the EIA yesterday, so not really expecting any significant moves, to be honest, today or tomorrow. Let's just go back on the euro dollar. Dollar yen is moving up. Kiwi is holding. But yes, I do have a feeling that we're not really going to see prices moving as much this time, apart from the euro dollar, the dollar yen, which probably for the rest of the session we might get up to the 107.60. I have doubts that we're going to take out the 107.73. Perhaps we will be better off around the bottom side of this high activity level at 107.60.86. Euro dollar turned, pound dollar turned, Q dollar turned. The question is, are we going to break to fresh daily lows or not? This really tells us that between the majors, yen is the weakest, Kiwi is the strongest. We've got yen, then, I mean, at least of those four charts, right? Yen is the weakest, then goes euro, then pound, and then Kiwi. It's very easy to see that, right? As we have also anticipated by looking at our strength meter. So on the downside, the end of hour seems to be actually pushing the dollar higher, yes, but we really want to see a break of the most recent activity levels, at least. On the euro dollar, this is going to be the 112, well, 78 at least. Ideally, we want this to break the 70.50. On dollar yen, we talked about this. It looks like it's heading to the 107.6 next. Kiwi, I wouldn't trade actually. I would just go on dollar CAD instead, and I'm gonna look at this breaking, and then, well, that one is another level. Down on the 15 minutes as well, what is possible over here is a potential bounce here. Now, if we remain above 35.70, it's very possible that prices might start moving up to the 50 or 38 and then fall back again. Okay. The USD CAD looks more like a a dead cat bounce, to be honest. The dead cat bounce, well, prices are falling and bounce like a cat, apparently. So down here, 113.56, or on the 1 hour, ideally, right? We could literally go down to these levels over here, 135.54, even to 135.45, then bounce up to the 50 Fibonacci, yeah, and then move lower again. So on the upside, if you're going to have a support, a resistance for risk management purposes, that can be up to the 135.93, which is the 136 pretty much as well. A very good psychological level. Yeah, 136. But in case we move above the 135.86. Maybe you want to have a look at potentially taking some partial a part of your position out, because the chances of that moving up would increase on dollar CAD. Okay. So the hourly candle close is what really matters, right? That gives us 5 more minutes to see what's really happening here. So let's stand back on the 1 hour chart on all of them. GBP USD, Euro USD, as they were strong, suggested over here. They're looking like, well, it's looking like there is a battleground over here now between bears and bulls, unless if in the last 4 minutes, I mean, if it can even be the last minute or the last few seconds, to be honest, we see a nice decisive break. Yeah. This would suggest for the pound at least that we're going to move back below 125 and get this marked as a false break and move lower in the medium term. And then once we break again this price, then we should be looking for prices to move higher. But again, out of context, right? Regarding with one compared to the NFP. Now, dollar yen is moving up to the 107.60. It's very possible that they will take it out even in the next 3 minutes. We're going to see how that pans out. One second. The dollar card, I don't think we're going to see much of a decline, to be honest, in the next hour or so, 2 hours. I doubt that will be the case. We're either going to get a very, very like a springboard sort of pullback up here, or we might stay down there for a bit and then move a little bit higher and then down again, perhaps to take out this range. As you well know, volatility is very high, right? And well, ranges of like 50 and 100 pips are nothing in the current markets, which makes you think, how come NFP isn't really moving the markets more than that, more than like, 30 pips? Well, we are going to see how this is going to pan out. It might perhaps be also the fact that US markets will be closed tomorrow, sorry. So there's 2 minutes left. We might see the 107.60 taken out on dollar yen, maybe not. On the euro dollar, we are well below 113 and we're moving further away. We just want to see price, of course, breaking the 50 and then the 61 and then the 78.6 Fibonacci retracement levels. On pound, interestingly, we want to see prices below 125 for further continuation of the downside move. Yeah, which, well, seems to be the case. But we are expecting a very short pullback anyway. And that means, well, within the hour, but it's more likely to be followed with more downside. 107.06, 107.6 taken by the end of the hour on dollar yen, as expected. The 61.8 Fibonacci retracement taken out by the end of the hour on euro dollar, as expected. And pound is looking for the 23.6 Fibonacci at 124.90 or so. Actually, that should be a little bit higher up. Sorry, I missed this bit over here, which is already taken out as well. We missed this one. So all levels seem to be coming in as expected. The whipsaw effect has really worked out as we expected. And I think this is the time where I can actually let you be and wish you a nice weekend. If you are, of course, also on holiday in the US tomorrow, enjoy the long weekend. In case you remain trading pay attention to what is going to happen in the next hour, because it's very, very important, not only for taking profits, but also for taking losses, okay? You wouldn't want to be leaving on the table all these that you've already actually sweat for so far already, right? The NFP was very good indeed. We've had a push initially to the upside against the dollar as a very usual, event, and now we start coming back into normal flows, normal levels, and it's going to be very interesting to where we're going to end at the end of the day, because that is going to determine tomorrow's session as well as what is going to happen coming next week. So thank you very much for watching, and well, in case you have any questions, feel free to contact me on any of my handles, Twitter, LinkedIn, or also on Instagram. Thank you again, and enjoy the long weekend.